Debate on tax rebate. In a sequel to one of my earlier presentations, I am presenting this short video for the benefit of friends who have claimed the benefit of tax rebate with reference to their capital gains income in their ITRs for assessment year 24-25 and have been required to go in appeal or are wondering what to do because their claims have been rejected, but they have not yet taken any corrective action. This will also be of interest to those friends who are going to file their income tax returns for the coming assessment year 25-26, that is with reference to the last completed financial year 24-25. Friends, for both these years, kindly bear in mind that the provisions of section 87 capital A had no restriction in the sense that the rebate could not be granted with reference to the incomes that are chargeable to tax at special rates under section 111A or section 112. As you are aware, section 111A is where you have short-term capital gains from equity. 112 is when you have long-term capital gains from any other capital asset, where obviously STT is not paid. As you are aware, under 112A, with reference to long-term capital gains on equity, shares or equity-oriented mutual funds, there is a clear restriction under the section itself that the benefit of 87A rebate is not available. So there was no dispute or doubt about that. But as far as these two sections are concerned, well, in 24-25, as you are aware, until 5th of July, the ITR utility allowed you to make this claim. And that's why taxpayers made that claim. Unfortunately, they got a shock of their life when, in the processing of the ITRs, that claim came to be rejected. And 5th July onwards, until the decision of the Bombay High Court came, way after in December of 24, there was virtually no scope even for you to claim the tax return because the ITR utility did not allow you to do so. As friends are aware, it was in the end of December that the Bombay High Court directed the CBDT to not only extend the time limit to 15th of January with a view to allow taxpayers to make their claim under rebate, which they could not make earlier, but also CBDT was directed to open the facility for the taxpayers to claim the tax rebate under section 87A. And finally, the Bombay High Court did not adjudicate on this issue and left it to the department to decide it on merits. And therefore, even in those revised returns in the end of December or January, whatever claim for rebate was made, in a very large number of cases, that claim came to be rejected. There are cases which have gone in appeal. There are cases where taxpayers have probably made rectification, and there are cases where taxpayers' demands were raised, paid, not paid, kept outstanding, but the whole question remained a big question mark as to what is the final position. Well, the Finance Bill 2025 and finally when it came to be passed as Finance Act of 2025 introduced a very significant amendment by way of second proviso to section 87A. Now this second proviso, for the first time, spelt out the intention of the department, which was also explained by the finance minister in our budget speech, that this rebate would be available, and the interpretation of zero tax was to be understood and made in that context, that this rebate under section 87A available to a resident individual would be allowed only with reference to the tax that is payable under section 115BAC, subsection 1A, that is tax at the normal rates. And the departmental interpretation that on special rates, whatever the tax is, no rebate would be allowable, that came to be legislatively restricted by introducing this proviso. Friends, I would like to read the language of the proviso exactly because that is of great use to us for purposes of understanding the objective and intent of this video presentation. The proviso says, provided further that the deduction under the first proviso of section 87A shall not exceed the amount of income tax payable as per the rates provided in subsection 1A of section 115BAC. Now let me pause here. This proviso means that where you are claiming a rebate because you say that you are a resident individual, your overall income is within the threshold limit and you are eligible to claim rebate. But then when it actually comes to computing the rebate, this proviso says that the amount of rebate that you will get will not exceed the tax that is payable as per the rates prescribed under section 115BAC 1A. What are these rates? They are tax rates on your normal income. Lo and behold, this amendment, friends, kindly make a special note of it, is going to be effective from the 1st of April 2026. That is assessment year 26-27. That is financial year 25-26. So that means this proviso, which is extremely potent in ensuring that a taxpayer cannot make his claim for rebate with reference to special incomes of long-term capital gains under 112 or short-term capital gains under 111A, is not applicable for the earlier years. Last year where you filed your ITR for assessment year 24-25, or the current assessment year where you will be filing your tax returns very shortly in July or October, claiming the benefit of section 87A rebate with reference to your special incomes under section 111A or 112. Now, what can you do with reference to this amendment that is made? You would be in a position to jolly well take up this contention in the appeals that you have filed already or what you may want to file now on for these 2 years, or you can even go for a rectification, or you can claim relief under section 264. You know, these are 3 avenues through which you can claim relief where your claim is rejected, and contend that this amendment in section 87A by way of second proviso which is inserted is effective from assessment year 2026-27. As far as assessment years 2024-25 and 2025-26 is concerned, there was no such restriction that could be even, latently interpreted as having been inbuilt into the section. And just because of circular or notification that was issued that, you know, it was the intent of the department that this benefit should not be granted. And in fact, the court, you know, also took a note of it when the matter reached the Bombay High Court, that there was nothing which was changed prior to 5th of July, post 5th of July in terms of the legislative interpretation. In fact, whatever was that situation earlier continued right up to 31st of March 25. So as far as these two assessment years is concerned, friends, let me sum up. Take up any case of a resident individual. For these 2 years, 87A threshold limit was rupees 7 lakhs. Say, let me give an example. Your total income is 7 lakhs, in which you have 2 lakhs of your short-term capital gains and 5 lakhs is your normal income. Now, when you are computing your normal income, 5 lakhs, 3 lakhs is your basic exemption limit. On 2 lakhs, you know, the tax payable at 5%. In fact, for assessment year 25-26, it is 6 lakhs. Earlier it was 5 lakhs, 3 to 5. Here it is 3 to 6. So in the earlier year, you know, it was 10,000, and then on the remaining 5 to 7, it worked out at the rate of 10%. So that's how, you know, you used to come up to 25,000. In the subsequent year, you know, you had from 3 to 6, you know, the 3 lakhs, the tax payable at 5% was 15,000, and 6 to 7, you know, again on that 1 lakh, it was 10,000, so 25,000. So 25,000 rebate, and in the case that I gave the example, out of 25,000, friends, you could claim, you know, because your, what would be the tax? The first 5 lakhs of your normal income would attract tax at 5%, being 10,000. On the amount of short-term capital gains at that time, you know, for 24-25, the rate was 15%, 25-26. We presume that it comes under 15% and does not go beyond 23rd July. So take the case that it is 15%, and on 2 lakhs, 15% is 30,000 plus 10,000, so 40,000, out of which you can claim 25,000, pay off the balance 15,000 and get through. The departmental interpretation is that out of the tax payable of 40,000, we will give you the benefit of rebate only with reference to that 10,000, because that's your normal income tax, and the 30,000 which you have to pay, you know, you will have to pay the whole of the amount, notwithstanding the fact that you have that 15,000 of rebate that is still available to you. So this is just an example. In fact, in a case where it is entirely short-term capital gains, you know, taxpayer may be called upon to pay the whole amount, you know, of short-term capital gains without claiming a single penny of benefit of income tax rebate. So there could be several scenarios. But the crux of the matter is, now if you go to an appellate authority or go to an authority for rectification of your assessment, or even claim that the processing done by CPC is erroneous and you know, you need to have a relief in the context of the clear language and interpretation of the section, you can contend emphatically that until assessment year 25-26, the benefit of rebate with reference to the special rates income just cannot be denied. Okay, if it's your intention and you have brought in the legislative amendment from and onwards 26-27, you will not grant any benefit of rebate. But at least this legislative amendment has given a sigh of relief that taxpayers can take for their last year's litigation or matters hanging on account of uncertainty. And I would say even go one step further, claiming the benefit of tax rebate if eligible for the assessment year 25-26, relying on this interpretation that this is governed by the old law. So friends, I hope this smart tip or advice or clarification or interpretation that I have had the opportunity to present to you will help you in taking care of your ITR for 24-25 and also planning the filing of your ITR for 25-26 assessment year. Thank you very much.